Our show on all of this. Ward McCarthy is the chief financial economist at Jefferies and the former Richmond Fed senior economist. We also have traders at the New York Stock Exchange and the CME Group, Timothy Anderson and Alan Nuckman. Gentlemen, thank you for joining us. Ward, I do want to begin with you. I want to ask you two questions. First of all, define the January jobs report. How strong was it? Were you surprised? And then, with your knowledge, with your experience with the Fed, are they disconnected to the data at this point? Because the messaging seems off.
Well, as far as the labor market is concerned, the January employment numbers just unequivocally indicated that the labor market is in a great place. It's the strongest it's been in decades. We have job growth that, frankly, is striking, and wage growth that is really starting to generate more momentum as well. So the labor market is in really good shape. As far as the Fed message is concerned, I think what the Fed's trying to do is take themselves from being center stage and putting themselves in backstage for a period of time. And the primary reasons for that, I think, are two. First of all, if you look at the dual mandate, the inflation objective, inflation's starting to decelerate or has been decelerating recently, and so they don't feel compelled to raise rates in an environment where they're not meeting that objective. The second issue is the change in Washington. A year ago, the economy was really getting a boost from fiscal policy that really propelled the U.S. economy to growth of over 3% in 2018. Beginning of 2019, very different story. There are a lot of landmines out there potentially. We've already had a government shutdown, could have another. We could have a debt ceiling crisis, and we're still waiting for progress on the trade front. So I think the Fed just wants to kind of wait in the weeds for a while and see how things unfold, and then they'll readdress the normalization process probably the second half of the year.
So, Tim, where's the recession that everybody was so worried about?
Well, I think it's very clear there's not going to be one. Certainly not in 2019, probably not even in 2020. I just think that was just an overplayed amount of fear-mongering by people that thought it was a topic that had to be just brought up continually until the markets prove them wrong.
So it's a schizophrenic market because we had the worst December for the S&P, Alan, in 87 years, followed by the best January in 32 years. What message is this sending to you?
Well, nothing really changed fundamentally. We had the December decline, the unwind, a very unkind unwind, but those were profits given back. If you look at the markets now, we bounced 15% off the lows, and we're positive 8% in 2019 alone, which puts us now about 8% away from the September all-time highs. Now, we've seen this before, and over the last 9 years, each and every time that it's bounced halfway back off of a sell-off, it's made new highs. So if you look at that projection, you can look at 3,500 as the target in the S&P, which is about 30% above, and let's put that in perspective. We're already 300% above the lows in 2009. So we're in a strong bull trend until proven otherwise.
Ward, a lot of investors are worried about what Amazon had to say today. Their projected revenue a little bit light, stock is down. What do you make of Amazon's report?
Well, Amazon is a good indication of the economy. However, what they're telling us is that their sales are great, their profits may not be as great. So that says a lot more about Amazon than it does about the economy. The labor market is the best indication of where the consumer sector is going. It's robust. The consumer sector will be robust. And whatever Amazon's problems may be at this point in time, I'm sure they'll work them out in the quarters ahead.
All right, Alan Nuckman, you worried about the consumer at all? And are you worried about the consumer this weekend maybe buying and feasting on some chicken ribs? Did I get that right?
Yeah. Well, yeah, that is right. That's one thing that hopefully we do here is we learn how to recognize opportunity. And studying the grain markets, I came out with a chicken product. It's called Chicken Ribs. It's chicken that tastes like ribs. So it's a big weekend for food this weekend. And it came to me as the fact that people want healthy barbecue. So it's rain or shine. It's healthy barbecue time. Just warm this up. It's chicken that tastes like ribs. So it's a very healthy alternative. And it goes well with beer if you're watching the football game.
It goes well with beer. Timothy, how does that sound to you?
It sounds great.
All right, Ward McCarthy, Tim Anderson, Alan Nuckman, thank you very much. We appreciate it.
Thank you.
Thank you.
All right. So Walmart, the biggest laggard on the Dow 30 after announcing new policies on quarterly cash bonuses for its hourly employees. It's also being weighed down by Amazon's weak first quarter forecast. Up next, internet freedom.